Hey, what's up, guys? All right, so today we're going to talk about what a real estate investor is. I get this question all the time, and people always assume that I'm a realtor, which I'm not. And it's a fair question. It's just a not very well known industry, I guess. But yeah, so on these first few videos, I'm going to cover a lot of really basic stuff. We're going to cover a lot of ground, but it'll be good to get it out of the way and get into the more complex stuff like structuring big deals and using a lot of money and stuff like that. So most investments fall into these two categories, either active or passive. There's a lot of ways to do different investments, but it's usually either one of these two. And with that, I mean, we'll start on the passive side. So basically, you can invest in companies that invest in single family homes or multifamily homes. And you can do that in a few different ways. I'll go into that later. Or you can invest in real estate investment trusts. And basically, what they are is they're listed on the TSX or various stock exchanges. And what a lot of people don't understand about REITs, and a question I get often actually is, well, why would I invest with you? I can invest with a REIT. So basically, what I say is there's a time and a place for real estate investment trusts, but if you want to buy an actual part of a building, a real estate investment trust or a REIT isn't the way to go. And what I mean by that is the price of a REIT doesn't reflect the underlying asset, which basically, like, if the stock tanks out, or say there's a stock market crash or a dip in the market, whatever, your REIT is actually going to reflect that. And so it doesn't necessarily reflect the underlying asset. Whereas if you invest in a multifamily apartment building with an active investor, you actually own a chunk of the building, or you have security in the building somehow. And then another way to invest is in a business. So I know people that have real estate investment companies. We don't let people invest directly in our business. We let people invest with us, alongside us. But there's people starting out that will let you put in an investment and own a portion of their company. So that is another way to do it. So basically, if you don't have a lot of time and you have a little bit of money that you want to put to work, or you have extra capital that you want to start like actually getting a return on, this is the route that you're going to go. So you're going to start looking for active partners. And this is what we do. And there's a lot of people that do it, and there's a lot of different ways to do it. But some of the main ones are like wholesaling. So what that is basically you're really good at finding deals, off market deals mostly. You will actually put the property under contract, and you'll resell the contract to other investors. And you can make whatever, 5,000 or 20,000 per wholesale. Like, you can make a lot more too. And like, basically you're taking a cut of the spread. So you're buying it for, say, whatever, 100,000, and then you're selling it for 110, and then there's still meat on the bone for the person flipping, and then say it's an investor or another friend or something like that. And then you can be a flipping company. You can invest in single family homes. You can invest in multifamily apartment buildings. You can get into commercial, retail. Those are your bigger ones. It requires a lot more capital, but they're also more secure investments. They're long-term investments. Whereas your flips are more short term. So there's a million different ways to do it. But always on the passive side, do your due diligence. Well, both sides, but especially on the passive side, because you have to vet your active partner. Yeah, like, that's a big deal. If you put your money with somebody who doesn't know what they're doing, or they don't understand the market or something like that, you can lose all your money. So there are ways to do it, but my number one tip would be definitely vet your partner. And then as an active partner, the number one tip is to know your markets. You need to know what you're getting into, and it's not your money that you're putting to work, so you need to know and you need to be sure. But yeah, so different ways to do that are, so if you want to be a passive investor, there's different ways that you can do it. You can actually, there's two models, the equity model and the debt model. So if you invest in the equity model, you actually own a portion of the cash flow, appreciation, forced appreciation, or principal pay down. So essentially, say you're a passive investor in a multifamily building. So you'd partner with the active investor, put X amount of money in, and you'd get X percent of the building, actual equity. So then you participate in all four of these. And then when you go to sell the building, you get 20% or 15% or X amount upon sale too. So equity is definitely really a good way to go. But the debt model is a more secure way to go. So what that is essentially you're providing a loan for the investor. So the active investor will purchase the multifamily apartment building, and the passive investor will basically provide a loan of say $100,000 or whatever's needed, the active investor will actually pay like say a set 6% on that money. So the passive investor actually has just like that same amount of money coming in every single month, and they're secured on title on the building as the lender, and it's a good way to do it. It's definitely a more secure way. Whereas if you're on the equity side of things, invested in a multifamily building, and say there's a cash call, you're going to be on the hook for X% of the cash call too. So whereas if you're on the debt side, that's the active partner's problem. So again, know your markets. The different benefits are leverage, tax advantages, depreciation. Always consult your accountant and your lawyer on either side of these. When you're putting your JVs together, you need to make sure that they're solid and everybody's secure. Yeah. So anyways, I don't want to go too complicated right off the bat. So that pretty much covers a good base layer of what a real estate investor is. And yeah, stay tuned, and I have a lot more videos coming your way. So we'll see you guys.